Hey there folks, if you've had your eyes on the investment scene lately, you've probably noticed that NIO is causing quite a stir among Zacks.com visitors. Let's dive into what could shape NIO's performance in the near term. NIO stock has been on fire, showing a whopping plus 18.6% jump in the last month alone. That's compared to the sluggish minus 0.3% change in the Zacks S&P 500 composite. And guess what? NIO is part of the Zacks automotive foreign industry, which has revved up an astonishing 3.8% during this time. But here's the big question, where's this stock headed next? Flashy news or rumors about a company can send its stock on a roller coaster ride, but you know what's even cooler? It's those rock-solid, fundamental facts that drive the real game. When earnings estimates shoot up, so does the stock's value. And when the value is more than what you're paying for, that's when you might want to jump in. Studies tell us that earnings estimate shifts can steer short-term price moves. Let's get to the nitty-gritty. NIO Incorporated's expected to hit a loss of 36 cents per share this quarter, a dip of minus 44% from last year. The buzz? The Zacks consensus estimate has stood its ground over the past month. For the full fiscal year, the consensus earnings estimate of minus $1.43 shows a drop of minus 10.9% year over year. And guess what? That figure shifted a tiny minus 4.6% in the last month. But here's where it gets interesting. Next fiscal year, that consensus earnings estimate of minus 76 cents? Brace yourself, it's a whopping plus 47% leap from NIO Incorporated's past year's report. Oh, and in just the last month, it soared plus 21.8%. Wait, there's more. Check out our secret weapon, the Zacks rank. It's like a Jedi mind trick for stocks. So, buckle up because NIO's journey is about to take a thrilling turn. So, what's the buzz on NIO Incorporated's revenue game? The word on the street is that the consensus sales estimate for this quarter is around $1.35 billion, clocking in a change of minus 11.8% compared to last year. Now, check this out. The estimates for the current and next fiscal years are riding high at $7.79 billion. That's a plus 7.3% shift and a jaw-dropping $13.19 billion. Yeah, you read that right. A whopping plus 69.4% change. In the last quarter, NIO Incorporated pulled in revenues of $1.55 billion with a slight minus 0.6% dip from the previous year. And the plot twist? The EPS for that period was minus 42 cents, while it was minus 18 cents a year ago. When we size up the actual revenues against the Zacks consensus estimate of $1.69 billion, it's a surprise twist with a minus 8.11% deviation. And wait for it, the EPS surprise? A staggering minus 90.91%. Now, let's get real about expectations. NIO Incorporated didn't quite hit the bullseye on consensus EPS estimates or revenue estimates in the last 4 quarters. Alright, let's talk numbers. Valuation, folks. This isn't just about price tags, it's about seeing if a stock's got substance. Think of it like comparing a vintage find to its market value. It's got to make sense. So, drumroll please. NIO Incorporated gets a grade of D in the Zacks Value Style Score department, suggesting it's strutting a bit of a premium compared to its pals. If you're curious about the nitty-gritty details that shape this grade, there's a link with all the juicy info. Bottom line? Take these tidbits, chew them over, and then decide if the NIO Incorporated buzz is worth tuning into. And hey, with a Zacks rank number 3, which is hold, NIO Incorporated's ready to roll with the market vibes for now. The Bank of America also gave them a nod with a buy rating and cranked up the excitement by boosting their 12-month price target on the stock to an excellent $16.20, up from the previous $15.40. And what sparked this upgrade? It's all about NIO's recent delivery digits. July was a game changer for NIO, like fireworks on the 4th of July. They zoomed ahead with a whopping 20.5K units delivered, and here's the kicker, that's a jaw-dropping 104% surge compared to last year. Talk about hitting the accelerator. But wait, there's more. The absolute stunner is the mind-boggling 91% spike compared to the previous month. The superstar in this race? None other than the sleek ES6 model, which raced past the 10K mark in deliveries during the same month. The sales for July tell another story, a total of 75K units for NIO's YT model, with an extraordinary year-over-year growth of 23%. Analysts are chiming in too, predicting that NIO's delivery numbers will cruise around the 20-21K range per month in August and September, thanks to some auto component constraints. But don't fret, the crystal ball shows that component supply will hit high gear come for Q23. Before we proceed, we'd like to thank you for watching this far. Bank of America isn't holding back either. They've given their predictions a makeover, dialing up the 2023/24/25 sales volume estimates by 0.4%, 1.6%, and a whopping 16% for ET5, ES6, and NIO's mass market superstar, Alps. But the share prices of NIO took a slight dip of 4.78% in pre-market trading on August 16th. So, buckle up folks, the NIO ride is still in full swing. Let's dive into the recent performance review of NIO Incorporated stock. Hold tight because, on June 12th, the NIO Incorporated stock took a bit of a dip, sliding by minus 5.51% to settle at $11.83. Throughout today's action, the stock danced between its lowest point at $11.55 and its highest at $12.34. Things have been shaky over the past 5 days, with the stock losing about minus 15.92%. However, looking at the bigger picture, NIO Incorporated shares have managed to rise by a solid 21.33% since the beginning of the year. But let's not forget the ups and downs. The stock has witnessed a minus 43.96% drop in the past year. It hit a high of $22.74 on August 4th, 23, but also saw a low of $7 on June 1st, 23. Checking the moving averages, the 50-day simple moving average or SMA stood at $10.90, while the 200-day SMA was $10.17. And in terms of trading activity, a total of 71.05 million shares were traded during this session, compared to the 67.4 million shares in the previous session. Now, let's talk about this stock's support and resistance levels. On the 24-hour chart, there's a support level at $11.47. If that gets broken, brace yourself for a potential tumble to $11.12. But there's a flip side, resistance at $12.26, with another possible roadblock at $12.70. Now, let's peek at some technical indicators. The Relative Strength Index, or RSI, over the past 14 days is at 44.40, pointing toward a neutral technical sentiment, and the Moving Average Convergence Divergence, or MACD, paints a picture of minus 1.55, suggesting that the price could be headed downward in the next trading period. Things got interesting on July 30th, 2023, as the short interest in NIO Incorporated stock surged, dropping by minus 12.08 million to hit 104.28 million shares. Compare this to the short interest recorded on June 29, 2023, which was 116.36 million shares. This decline of minus 11.58% could suggest a negative sentiment surrounding the stock. Shifting gears, let's look at what the analysts are saying. According to FactSet, their crystal ball predicts that NIO Incorporated's share price will hit an average of $92.73 in the next year. That's a jaw-dropping increase of nearly 571.49% from its previous closing price of $12.52. And hold onto your hats, the analysts are quite the optimistic bunch. The highest price estimate dances around a lofty $151.16, while the more conservative estimate hovers at $45.84. And here's the kicker, 38 analysts have slapped an overweight rating on NIO stock in their predictions for 2023. What could be next for NIO? Let us know your thoughts in the comments. Will their journey be uphill from here? If you enjoyed this video, make sure to hit the like, share, and subscribe for more videos like this. Thanks for staying till the end. This is Nate, and I'll see you in the next one. If you want more of NIO's stock analysis, check it out in this next video.